So, Jen, if you follow the company, today's news wasn't that shocking because they have been best-in-class retail for a while now. The question is, for investors, is now a good time?
Well, that is the question. I mean, they're a fabulous company. I run in the gear. I'm sure Wilf runs in the gear. And
He doesn't. They don't make
great
pants
product.
long enough.
They're not long enough.
Which I find hard to believe.
That's probably true. But anyway, they're a great company. We all know that. The product's great. They're in a market that's increasing at a decreasing rate, right? So it's that whole market is slowing down. They're the winner in it. They're also the most expensive company in it. And so when you look at them, you say, as this slows down, will it start to affect them? You also worry about 2019 being a slower year for the affluent and aspirational customer because it's very likely to be. And then I look at it and say, could one more sell-side analyst recommend it? I don't think so. And it's running at 38 times when you look at it as far as its, pricing. So you say, I don't know, do I want to buy it now when it's at 38 times and it may see some slowing in the future? And stocks like that can get cut in half just by the market slowing down and taking a look at the multiples. So it's not that I don't love them. I do. I love the product. I love the company. I'm just not sure I want to own them at 38 times in what I see a slowing market going forward.
Well, we have someone who says yes to that question. Brian, why at 38 times and a 77% gain over the last 12 months is Lulu still a buy?
Well, look, I don't disagree that, at some point these high growth companies do slow. I just think the key with Lululemon is that's not going to happen anytime soon. If you look at the pre-announcement they issued today, here they're talking about mid to upper teens comparable sales. I'm not seeing that anywhere else in retail. And frankly, this is a stock that it's expensive. And I would probably quibble with the multiple Jen put out there a bit. I think it's more kind of a mid to high 20s multiple, depending on what earnings you're looking at. But it's actually well off its highs right now. This is a stock that's trading 20% off its highs. And I think, and as I look at that, I think Lulu's stock came down basically in a very tough market, and the shift lower in the stock price was completely at odds with much stronger fundamentals of the company.
Jan, we saw Macy's week release. We saw L Brands a week release, clearly a very strong one today from Lulu. Do you think we're going to see a lot more of this pretty stark differentiation as we get more numbers from the holiday season, or are one of these one-offs?
Oh, no, we've seen some pretty stark differentiation already, right? And I think we're going to see more in the not great, okay category than we're going to see in the Lulu category. Macy's was really the most disappointing. I mean, I would call them terrible, and I would call L Brands terrible. But when we saw Kohl's, they were okay. When we saw Target, they were okay. But despite that, the market didn't really like them. Bed Bath & Beyond was the one they liked, and that's just a case of if the price finally gets low enough and the expectations get low enough, you can beat it. But in general, people turned in decent numbers, but not the kind of numbers you would have thought, given the fact that MasterCard was telling us sales were up 5.1%, the best in a decade. And yet the numbers were just okay coming out, and some were actually bad. I think it's a clear case where there's good growth totally with the consumer. The consumer's in good shape, but there is no ability to pass through pricing, and costs are rising, and that's putting pressure on all of these companies.
Brian, as you look across your coverage group, just how much of an exception is Lulu? I mean, you mentioned 10 to 18% comps, or whatever the double-digit comps were. Are we going to be talking in a few quarters about how it's really hard, they're lapping these great comps, or is there somehow, can you bet on that type of momentum continuing there?
Well, so let me take that in pieces. First off, how much of an exception is Lulu? It's a big one. This is one of my fastest growing, I'm going to say brands, because I follow a bunch of companies. Some are brands, some are retailers, but definitely one of my fastest growing companies. Now, with regard to the sustainability of that, yes, okay, they'll have to deal with lapping this. But if you look what's happening here, and this is one of the things, the factors that intrigues me most with Lulu, is that you just have this incredible product innovation. It wasn't that long ago that this was a yoga company focused primarily on female customers in Canada and the United States. Okay, now it's a company that is taking its legacy, if you will, in yoga, extending that to other type of sports, if you will, broadening its reach beyond just Canada and the United States. So I really think that that's what helps to fuel the sustainability of these results, is that Lulu is still a relatively small company with great innovation, fighting to become a bigger player in a very, very large space.
And just really starting to get going overseas. That's why you're seeing such tremendous growth numbers there.
That's correct.